Hey everyone, welcome to the channel. Bitcoin's everywhere in 2025. Businesses are accepting it, countries are eyeing it, and maybe you're wondering, should I invest? Today I'm breaking down 3 ways to jump into Bitcoin from beginner-friendly to advanced. We'll explore why it's worth considering, dive into each method step by step, and wrap up with what's best for you. Stick around, this is your Bitcoin roadmap. So why Bitcoin? It's the original crypto, launched in 2009, and it's decentralized. No banks, no middlemen. In 2025, it's exploding. Companies like PayPal and Starbucks take it, El Salvador's made it legal tender, and even big banks are warming up. Prices? Volatile, sure, but the long-term trend has been up, way up. Let's not forget the recent change in administration. President Trump is surrounded by tech champions like Elon Musk. The future potential for cryptocurrency appears bright for now. It's speculative, no doubt, but with growing acceptance, it's a case for dipping your toe into this digital gold rush. Alright, here are your 3 paths to Bitcoin investing. First, direct ownership. Buying Bitcoin yourself, like on Coinbase. Second, ETFs. Think stocks that track Bitcoin, like IBIT, ARKB, or Bito. Third, Bitcoin futures. Betting on its price with leverage. Each has pros, cons, and differing strategies, so let's dive in. Option 1. Owning Bitcoin directly. This one is pretty easy. Open a Coinbase account. It's like a crypto bank. Sign up, link your card, and buy Bitcoin in minutes. You can hold it there, trade it, or cash out. Super beginner friendly. But, here's the catch. Coinbase controls your keys, and can charge high commissions. Want more control? Move it to a personal wallet, like a USB drive or app. You'll manage your own keys like a digital vault, but if you lose that key, bye-bye Bitcoin. I have an account with Coinbase just because it's easier, besides I lose things all the time. I'd hate to lose thousands on a USB drive. I have a link in the description for you to take advantage of a special offer at Coinbase. Next up, ETFs, exchange-traded funds. IBIT, the iShares Bitcoin Trust, and ARKB, the ARK21 Shares Bitcoin ETF, both track Bitcoin's price directly by holding it, so they're like owning Bitcoin without the hassle. Let's compare them. IBIT and ARKB are actually very similar. Both were founded in January 2024. Both hold Bitcoin directly and charge similar fees, although ARKB is slightly lower. IBIT manages over $20 billion while ARKB manages over $3 billion. Each of them have strong options markets with good liquidity and open interest. There are a number of ways to trade in these ETFs. First, you can just buy them and hope for Bitcoin to continue its rise. Since the option market is good, there are lots of other ways to participate. You can sell covered calls on your long positions for regular income. Of course, the downside is that you may not participate in large up moves. Alternatively, you can sell puts to collect premiums, betting Bitcoin won't crash, or just to buy in at a lower price. When prices look elevated, I will often use this strategy to earn premiums while waiting for a more supported entry level. There are also calendar call writing, often called the poor man's covered call. In this case, you buy a long-term option, known as a LEAP, long-term equity anticipation securities. Fancy name, but just means long-dated options. You purchase a long-dated option, maybe 12 or 24 months out, and then sell a closer expiration, 30 to 45 days. This trade has its ups and downs, but can have good returns in sideways and up markets. Another benefit is that the max loss is capped at what you paid, which would be substantially less than purchasing actual shares. For others, concerned with Bitcoin's large value swings, you can use options to hedge potential losses. You can accomplish this with a collar trade. This means you buy a put and sell a call to pay for it. You cap your upside with the call sale but limit your downside risk. The variation on this trade that I use is to buy a put spread and sell the call. This doesn't protect the downside fully but will allow for some protection. As an example, let's say I purchased 100 shares of IBIT at $55.47. I could add options expiring in 29 days, selling the $57 call and buying a put spread, buying the $55 put and selling the $50 put. For these positions, I would receive a credit of around 68 cents or $68. In this case, as long as IBIT is above $49.79, I make money. If IBIT rallies to $57 or higher, I will earn $1.74 or $174 total. On a total investment of $5,479, this is a 3.17% return over 29 days. Not too bad, especially considering the Bitcoin could drop 10% and I still wouldn't lose any money. Anyway, lots of choices on how to play these. Before we move on, let me tell you about my favorite broker, Interactive Brokers. Why do I like them so much? A bunch of reasons, but the big one is that they pay me high interest on my cash balances. As an option seller, I often will have large cash balances and it can really boost your returns. I've left a link in the description. With this link, new accounts receive up to $1,000 in Interactive Broker shares. Let's get back to it. The other Bitcoin ETF we are looking at is BITO ProShares Bitcoin Strategy ETF. Unlike IBIT and RKB, BITO uses futures contracts, not direct Bitcoin. Founded October 2021, it's got $2 billion in AUM, a 0.95% expense ratio, and a juicy dividend. In 2024, BITO paid $14.03 in dividends, which was a whopping 68.5% on the starting price for the year. So far in 2025, they have only declared one dividend of 94 cents, but annualized, this is nearly a 50% payout on today's price. Returns? Trickier. Futures roll costs mean it lags Bitcoin's spot price, maybe 10% year-to-date versus Bitcoin's 15%. Also, dividends are contingent on active management and interest. Any fall in Bitcoin or interest rate decreases could reduce dividend payouts or eliminate them entirely. So, if you are interested in capitalizing on dividend income, this could be something to look at. Interestingly, BITO also has a great options market allowing for some good option strategies. One of my favorites for this one is what I call a dividend capture strategy. Basically, it's purchasing the stock prior to the ex-dividend date and then entering a protective collar trade, selling a call and buying a put spread. This way, you can receive the dividend and protect some downward movements. Like IBIT and RKB, other strategies can also be used here, including put selling or the wheel strategy. It all depends on your investment objectives. Now let's look at the last investment option we're covering today, trading Bitcoin futures. This has a commodity symbol of BTC. Like other commodity future trading, this allows for higher leverage transactions. So for the beginner trader or even intermediate trader, this one is probably not for you. A single BTC future purchase has a notional value of around $240,000. There are options available and have a multiplier of 5 times. However, the options markets are wide with little open interest. So, I won't get into too many details on this one, but if you want to speculate here on large movements of Bitcoin, Bitcoin futures could be a way to hit that home run. Do your homework and really understand your risk on these. I can't emphasize this enough. Remember, leverage kills. For me, I've traded many futures in the past, but I would stick to the direct ownership or taking positions with freely liquid ETFs. Well, there you have it. Something for every type of investor. Beginners can look at direct ownership or ETF purchases. Options traders can use all kinds of strategies to get Bitcoin exposure, or experienced speculators can use the big guns with futures. I have accounts at Coinbase with direct ownership and also regularly trade Bitcoin ETFs using a variety of option strategies. How do you trade your crypto? What is your strategy? Let me know in the comments. If you found this material valuable, please like and subscribe. It really helps. Thank you for watching. Until next time, good luck out there. As always, the information presented in this video is for educational purposes and should not be considered financial advice. Be sure to evaluate how this information and securities discussed align with your financial needs. Consult with a financial professional if needed.